Ladies and gentlemen, good day and welcome to NGL Finechem Limited Q2 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Mehra. Thank you and over to you, sir.
Thank you, Neerav. Good morning, everyone, and thank you for joining this Q2 FY24 earnings conference call of NGL Finechem Limited. The results and investor updates have been uploaded on the stock exchanges. To take us through the results of this quarter and answer your questions, we have with us today Mr. Rahul Nachne, Managing Director, and Mr. Rajesh Lawande, Whole-Time Director and Chief Financial Officer. We'll be starting the call with a brief overview of the financial performance, which will then be followed by the Q&A session. I want to remind you all that everything said in this call reflecting any outlook for the future, which can be construed as a forward-looking statement, must be viewed in conjunction with the uncertainties and risks that the company faces. These uncertainties and risks are included but not limited to what we've mentioned in our annual reports, which you will find on our company website. With that said, I'll now hand over the call to Mr. Rahul. Over to you, sir.
Thank you, Abhishek. Good morning to all of you. I am Rahul Nachne, Managing Director of NGL Finechem. A very good day to you and thank you for joining us today for the Q2 FY24 earnings call of NGL Finechem Limited. I trust this call finds each of you in the best of health and cheer, and I hope those celebrating had a safe and enjoyable Diwali season. I am pleased to present to you the financial highlights and our company's performance for the Q2 FY24. It has been a strong quarter for our company. Our revenue from operations showed a healthy increase, marking a 13.5% growth over the previous quarter and 18.4% growth year-on-year. Sales stood at 80.18 crores for Q2 FY24. Our EBITDA margin recorded a significant improvement to 13.97 crores, reflecting a close to a 45% increase quarter-on-quarter and about 52% increase year-on-year. This performance positively impacted our EBITDA margins, which now stand at 17%, a 312 basis point improvement over Q1 FY24 and a 347 basis point increase from Q2 FY23. Profit after tax reached 40.48 crores, showcasing a 13% growth since the last quarter and a 124% increase from the same quarter in the previous year. As we delve deeper into the performance of the quarter, it is evident that the strategic decisions made have borne fruit. Our operational performance has been robust, and we have successfully translated it into sustained growth, even amidst economic uncertainties and global headwinds. This growth is especially significant as it comes at a time when the industry-wide average realizations have seen a year-on-year decline. However, we have countered this with substantial volumetric growth, and we anticipate that this momentum should carry forward into the subsequent quarters. Our margins have recorded favorable shift thanks to a significant reduction in raw material costs. This has allowed us to bounce back to our standardized margin levels. Staying put to our prior guidance, we maintain that our business sustainable EBITDA margin profile will persist in the 70 to 22% band. While demand has shown signs of recovery, we remain vigilant of the persistent challenge. Issues such as currency availability in markets like Egypt, Pakistan and Turkey have adversely impacted demand. Although our direct exposure to African markets is minimum, the currency volatility in these regions has an indirect influence on our operations through its effects on our customer base. Our resilience during these challenging times was bolstered by our broad and diversified API offerings, as well as the ongoing expansion of our portfolio. Our strategic choice not to be overly dependent on any single product, customer or geography has served us well, as we have seen a resurgence in demand for several of our long-standing products. On the capital expenditure front, we have maintained a measured execution pace. We are waiting for more definitive signs of demand recovery before we expedite our capex initiatives. Until then, we remain committed in funding our capital expenditures from the internal accruals generated from our business operations, thereby avoiding the need to leverage our balance sheet. Now, as we look ahead, we do so with cautious optimism. The indicators are promising, and the strategies we have in place are robust, but we are ever mindful of the fluctuating market dynamics. As I draw this opening address to a close, I must issue an important disclaimer. We have observed that competitors might have used the detailed information from our public disclosures to their advantage. Therefore, we will be exercising greater discretion in the details we share going forward. We request your understanding and cooperation in refraining from asking product-specific questions during this call, as such queries will not be entertained. This step is crucial to safeguard our strategic interests and maintain our competitive advantage in the marketplace. With that overview, I now open the floor to any questions you may have, keeping in mind the disclaimer I have shared. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Thanks for the opportunity and congratulations, Rahul and the team. We have really done very well in the last 2-3 quarters in spite of the environment being quite tough. So, Rahul, with regards to your initial comments and your also the press release, first of all, on the gross margin side, we are back to our gross margins, the normalized gross margins of around 50-55%. And I understand from your initial commentary that currently the product prices or the relations are still lower. So, two parts to it. One, is this sustainable going ahead? And also, is this largely due to the raw material price being favorable to us, or is there some product mix change also? That is my first question.
Yeah, thanks for your interest and your call. With regard to your first question, whether this is sustainable, well, I would like to, just give a cautious sort of a note over here that this is the first quarter where we have seen, the recovery coming out well. If you have seen quarter on quarter starting from early this year, that is Q4 of the last financial year, Q1 of this year, and now Q2 of this year, it has slowly been improving. And I am quite optimistic now that our worst part is behind us, and going forward, we should be able to look at things with optimism. But I would just like to add a note of caution that there are too many changes now taking place in the geopolitical area. So there is a lot of political uncertainty coming, and this tends to impact business sooner or later. So I would be a little bit cautious probably for another 1 or 2 quarters before I commit how sustainable these margins are. Again, I reiterate, I am cautiously optimistic. And your second question was this because of change in product mix or was it because of the raw material prices? So in this, I have to tell you that it's largely because of the raw material prices coming down, because there has not been any drastic change in the product mix as such. But chemical prices, which were at a sort of a peak last year, have more or less, fallen down to not probably their pre-COVID levels yet, but they have retraced at least 60-70% of the gains which they had earlier.
And with regards to the product prices for us, what is the trend like? The way you mentioned the raw material prices have retraced. So on the product prices side, if you could share some details.
Well, on the selling prices also, we have seen a fall in our price realization. And prices have gone down. It varies from product to product and also depends on the depth of competition for each product. So we have seen products coming down right from 15% going up to almost 40% in terms of selling price.
Sure. And sir, with regards to the geography-wise and customers and product-wise, we have been observing for last 2-3 quarters the product concentration as well as the customer concentration for regards to the top 3 has been reducing. So, and also on the geography side. So, is this growth which is coming in now becoming like where you have entered some new markets and those new markets are giving us growth, and at the same time the new customers are giving us the growth?
I don't know. Geography-wise, there is like hardly any change actually. It's more or less stable. But what you are saying with regard to product is definitely true. Our product concentration is coming down. So about a year ago, we had almost 75% coming from the top 10 products. Today, our sales, that top 10 product contribute to only about 65% of our sales. So this is because the newer products which we have introduced have started gaining strength, and now it's a much wider basket, and therefore reliability on any particular product is gradually coming down.
Last question from the CapEx. You have mentioned that you have gone slow and typically utilized your internal accruals till now and not tried to borrow funds at a time when the demand was not suitable to us. But with the current scenario, the demand improvement is being there. So when do we expect the CapEx being accelerated in terms of the money being spent? And what kind of timeline we can see for the greenfield CapEx to come through?
Yeah, meaning right now, as I said, we are a little cautiously optimistic. We'll probably wait for one more quarter to see how things go before we commit ourselves completely to this. So we will probably take our call early next calendar year.
Sure. Thank you, Rahul. Best wishes.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Ankit Gupta from Bamboo Capital Partners. Please go ahead.
Thank you for the opportunity and congratulations for a revival that we have seen in this quarter, Rahul and team. On product realization front, Rahul, are we nearing the end of product prices correcting, or you still feel that the correction is left in the market, and your views on price realization going down further from here? And how much has been the price realization fall on an average across our 25-26 products?
Yeah, so it's very difficult to predict, whether we have reached the bottom and things will go up or not. But my personal feeling is we are more or less at the bottom of the bell curve right now. It should definitely go up from where we are right now in terms of realizations and pricing. But as to whether this will happen in the next 6 months or a year, that is, a big question which I cannot answer, frankly. So we have to wait and watch and see how it goes. But I am pretty hopeful we are more or less at the bottom of the bell curve.
Sure. And how much has been the fall, let's say, compared to last year? How much has been the fall in prices? And if we compare the prices, current prices with, let's say, pre-COVID prices, are we near that prices or we have fallen below that as well?
As I said, meaning it varies from product to product. There are some products where we have seen a 15% drop in realization. There are some products where we have seen a 40% drop in realization.
Okay.
So it just varies over a wide margin, and it depends on the depth of competition for each product.
Okay. And for some products, have we seen prices below pre-COVID levels also, or it's still higher than pre-COVID for most of the products?
I had not put a thought to that actually, but let me think about it. I would say that we are more or less at the pre-COVID levels, yeah.
Okay.
In some, we are probably lower than the pre-COVID levels also.
Okay. My second question was on the current capacity utilization at our standalone and Macrotech level. What is the current capacity utilization? And let's say we are at 80 crore quarterly run rate. At full capacity utilization with some outsourcing that we used to do, when the markets were buoyant, what kind of revenue can we do from the existing infrastructure given the price fall that we have seen in the products?
I think we will probably be able to do between 350 to 400 crores along with a little bit of outsourcing, because we are doing very little outsourcing now. Everything is being done more or less either at NGL or at Macrotech. We will probably start outsourcing in the next 3 months so that we start building up capacity gradually as the markets come back.
And we were, in like 2 years back, we were also looking to increase our outsourcing from, let's say, 5% to 15%. That also, maybe in case you face some capacity constraint, hopefully over the next 2-3 quarters, we'll also be looking to increase that. And with that, can we touch, let's say, 450 crore kind of revenues from existing setup?
That would be a little ambitious. I would still go by, let's say, up to 400 crores is what I think we can do with current levels.
Okay. And
Rahul,
Rahul,
I'll request to come back for a follow-up question.
Sure, I'll do that. Thank you so much.
Thank you. A request to all the participants, please restrict to 2 questions per participant, and please join the queue again for a follow-up question. And anyone who wishes to ask a question may press star and 1 to join the queue. The next question is from the line of Ayush Mittal from Mittal Analytics. Please go ahead.
Hello.
Good morning, yeah.
Yeah, good morning, sir. First of all, sir, it's a pleasure to see the company coming back to the normal run rate, given the challenges that we are still seeing in the industry. So it's a good thing to see a performance and the resilience of a business model. Coming to the question, sir, one thing which I just feel, given having tracked the company for so long, is that at one point we were at a point where we wanted to expand our capacity, and seeing the market condition, we had slowed down our plans quite a bit. Even now, you said that maybe start of calendar year is where you'll take a call on that part. Can you share more of your thoughts on the expansion, where we are, how do we want to proceed on that, and by when do we intend to complete the whole of the capex, and also on the product development side, which is something which would be very critical for us to grow from the levels we are to the next level if we have to.
Yeah, so as I said, we are still a little cautious on doing more fresh investments. So we really are not sure whether the recovery is complete and we are, the bell curve is completed and things will start going up. So we will probably take this call early next year on the investments. But just to inform you, we are proceeding with the investment right now at a much lower speed, of course. Close to 90% of the civil work is already completed. And some equipment ordering in terms of, long delivery item is already started. But we are not fully committed to putting all equipment in, machinery in. But once we decide, it shouldn't take us more than a year to 15 months, between 12 and 15 months to complete the project right now. So we'll take this call early next year. So if we do that, then in 24, 25 we should have the plant up and running.
Okay. Okay. And what about the product development? Like, because one thing which I feel is that the product basket we currently have has its own limitations in terms of growth. So it is very important that we expand our product basket significantly so that we can tap new product areas and do the scale up. Hello.
Yeah. No, product development is going on in a pretty. Right now, our total product range has gone to close to about 28 APIs now. So product is going at a pretty good clip. I did not understand the question. What was that?
No. What I was trying to get the insight is more on these new products, like the new product basket. If we are expanding a product basket, how are we doing on that front? And if we are doing much more on that part, expanding this basket further, like from 28, are we on line to keep adding 3, 4, 5 products every year that we intended?
Yeah. Our target is to reach 35 APIs by 25.
Yes.
So
yeah.
We are very much on target with that.
Okay. Great. Yeah, that's from my side. Thank you.
Yeah.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Debashish Niyogi from Digital Investments. Please go ahead.
So congratulations first for a very good set of numbers. You have been always cautiously giving guidance with respect to margins, volume growth, and have been very open and transparent in answering our question. So my question to you, sir, is given that we are the market leaders in the top 5 products and also gaining market share in the next 5, and we also say that we have the chemistry skills. Now, my question to you is that if we have both in this context, we should have pricing power. And you always said that we don't have pricing power, not even 2 rupees, in one of the Concall many quarters back. Why is it so, sir? Being a market leader and also having chemistry skills, we still don't have pricing power?
Yeah, so I would like to address that in 2 ways. Number one is that, we are in a B2B business. And pricing power normally comes more from either IP or from brand power. Now, brand power does not exist here because it's B2B and we are doing only generics. IP also does not exist because again we are doing generic products which are out of patent for a long time. So how do you get pricing power in a B2B business? It's generally not possible. That's the first. And the second part is that there is always competition. Now, if we try to price products very high up, it will be very easy to flood the market because people will immediately start entering the market as competitors, and competition goes up. So margins will come down sooner or later. Pricing power in a B2B business is very difficult.
So, sir, then what is our edge? If we being the market leader and we have also chemistry skills and we are supplying to the top 5, 6 global animal API players, then what is our actual edge? I thought, maintaining great quality and servicing on time, our retention of customers has been 99%. These are edge. So should that not indirectly give us pricing power over the years with sticky customers?
No, see, in a B2B business, the buyer is always much well informed, and as a policy, no company keeps a monopoly supplier. So they always spread the risk by buying from multiple sources.
Mm-hmm.
Now, having said that, even if I am the let's say lowest cost supplier, no company will buy more than 60% of the requirement from me. 40% will still go to other two suppliers because they want to keep their supply chain intact. So, pricing power does not work, not in a B2B business.
Okay. So my second question, sir, is we are getting into every year 2 to 3 products almost, and we target to get into 35. But the opportunity size of each of these, products is very small. So in the pipeline to 35, do you have anything you need not discuss in detail, like you said in the conference, in the beginning of the conference, about specific strategy of the product itself, but do we have anything in pipeline to the build-up of 35 where the size of that particular product is huge with respect to either the product itself or where you are servicing with respect to geography?
Yeah, so we have slightly changed the product strategy. So in addition to some niche products, we are also doing some volume products now. And volume products have got a large potential, but at the same time, these are already existing products with multiple suppliers in place. What we are doing is we are targeting those products where there are only Chinese suppliers. So we will probably be the first from India to start manufacturing these products. So we are offering basically customers a China plus one alternative.
That's great, sir. Thank you, sir.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Next follow-up question is from the line of Ankit Gupta from Bamboo Capital Partners. Please go ahead.
Thanks for the opportunity. Sir, in case, earlier we had indicated that for the new greenfield capex, our pilot plant will be ready before the entire the bigger plant comes on stream. So that we will do the validation batches earlier and save on that 3-6 months of stability studies which we require for for starting production from the new plant. So let's say if the greenfield capex takes another 12 to 15 months from the time we decide to go ahead with installation of machineries and all. So will the pilot plant come into production earlier than the entire plant gets completed and we save on that 6 months of time?
Yeah. The pilot plant is scheduled to start by Q1 FY next year.
Okay. So that is expected to start even if we, let's say if we delay the starting of the entire plant.
Correct. So that has not been stopped. Pilot plant work is going on right now. Sure.
And on product basket, we have been targeting to add 5 molecules every year. So as you had stated that we have also started looking at higher volume and relatively bigger size of products. So let's say earlier our target molecule size was generally in the range of around 20 to 50 crores. So with the new products that we have already added or which we plan to add, are those products, let's say their market size bigger than what currently we have in our product basket?
Yeah, 2 of the products which we are targeting have a much larger market size.
Okay, so that can be in, let's say, few hundreds of crores as well.
Yeah.
Okay. And thirdly, on the geography-wise split, sir, can you tell us some of the geographies which are doing well for us, let's say which have bounced back now and where the demand is good for veterinary product?
Which are the geographies which have bounced back, you're asking?
Yeah. Which are doing well now and demand is back to.
Well, basically, East Asia is bouncing back right now.
Okay. Okay. And some of the new geographies which we are trying to penetrate where we have got some success?
Yeah, so East Asia is bounced back. Europe is doing well right now. Latin America is doing well. West Asia and Africa is still in trouble.
Okay. Primarily because of the currency issues.
Because of money problems, yeah.
Yeah. Okay. Sir. Thank you, and wish you all the best.
Okay, thank you.
Thank you. Next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
So, sir, going forward that we are going to be in some kind of an expansion almost every year. What is the ROC and ROE that we are targeting, which we will maintain, given that we are a B2B business and as such pricing power will never come to us very easily. So, will we maintain discipline on that?
I am unable to comment on that because we don't give forward guidance on our turnover or on our profits. But as I said, the long-term margins in our business are more like 17 to 22%. So we have just reached the lower level of that margin. We hope to take it to a little higher median going forward. Hello.
Yeah, thank you so much, sir.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Yeah, thanks for the opportunity again. One clarification, in a previous participant, you said the pilot plant will start by Q1 of next year. So you're talking about calendar year or you're talking about the financial year?
Financial year.
Financial year, sure. And sir, if you may permit to ask a question with regards to the product registration in Europe. In the Q4 call, you had mentioned that for 3 products you expected to get approval by December, and you were to file for approval for further 3 products. So, any details you can share on the same?
Yeah, so we have filed for. So there are 2 types of approvals one can take. One is known as CEP, and the second is by filing DMFs. So we have filed for CEPs for 3 products. Unfortunately, it's taking much longer than we anticipated. Normally, pre-COVID, they used to give approval within about 15 to 18 months. Unfortunately, right now, it's been close to about 21 months since our filing, and there are still queries being raised. So they are doing it at a far much slower pace as compared to pre-COVID levels. So right now, we think it might probably take another 6 months to get the approval. And in addition to that, we have also filed for 5 products. We have filed DMFs in various countries in Europe. So those are also under registration right now.
Sure. So this is 3 plus 5, total 8, right?
3 plus 5, correct.
Okay. And sir, further on the product side, in the previous March 23 call, we had mentioned that we had gone from, we had added further 2 products, and also we were trying to do validation of further 2 products. So the commercialization of these 4 products has already started. The commercial sales have started. Hello.
Right now, we have 28 products in commercial production. And so this was 6 months ago, no, which we had spoken. So yeah, they are more or less now in commercial production, yeah.
Sure. And so just one last thing, with regards to our greenfield capex, you had mentioned that we will go to the regulated market with our greenfield capex coming on stream once it comes on stream. So, and also our pilot plant you expect to start by next year Q1. So are we preparing the groundwork for the introduction of some of these products in the regulated markets from the greenfield facility?
No, the greenfield is being done primarily for the regulated markets only. With that in viewpoint, yeah.
Sure. So basically the groundwork, the preparation in terms of product side, we are at a somewhere advanced stage of doing on the product side. Can that be a right assumption?
Yes.
Sure. Thank you so much, Rahul. Best wishes.
Yeah, thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I will now hand the conference over to Mr. Rahul Nachane for closing comments.
Oh, thank you everyone for participating in this call. If you have any additional questions or wish to engage with us further, please reach out to our investor relations partner, the Investment Lab. Their email address can be found on the back of the investor presentation. We look forward to our next conversation again. Thank you very much.
Thank you very much. On behalf of NGL Fine Chem Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.